Okay, so today we're going to continue on chapter 9, accounting for non-current asset. So we went through the learning outcomes and now we look at the definition for fixed asset. Okay, so as you can see here, the fixed asset is asset which we purchase for a long time use. Sorry. Okay, so as I said earlier, asset is something that we purchase for a long-term use in business and we have no intention of selling it to the customer. So there are three types of non-current asset and fixed asset is one of it. Okay, so as you can see here, the fixed asset is an asset that is touchable. Okay, can be seen, for example, like properties, plants, and also machineries. Okay, the second type of non-current asset is intangible asset, which has no physical existence. Okay, for example, patents, copyrights, and also goodwills. And the third type of non-current asset is long-term investment. So these three types of non-current asset is the definition of non-current asset, but in this chapter we focus more on fixed asset. So earlier I already explained on how to determine the fixed cost asset. So besides having the cost price as written in the invoice, we need to include also the transportation charges, installation and testing, and also the sales tax and any legal fees included. Alright, this is to make sure or to prepare the asset so that we are able to use it. Okay, so we are preparing the asset for its intended use. So all the costs that we need to bear besides the cost price in the invoice will be included as the fixed asset cost. So as you can see here, okay, if there is any additional cost or any other cost that does not increase the operating efficiency, meaning that it has nothing to do with the efficiency, the productivity, or the useful life of the asset, it is not considered as a cost of the asset. So it is more to revenue expenditure. So we are talking actually about capital expenditure, whereas the cost that we bear will increase the operating efficiency, productivity, and useful life of the asset. So these items will be included in the cost price of the asset. But if it doesn't increase any of it, so we will treat the cost as expenses. Okay, for example, repairs or maintenance. So repairs and maintenance are something that we need to pay, but it has nothing to do with the productivity or the efficiency of the asset. Okay, but we have to do the maintenance, we need to repair, and we need to pay for all the costs just to maintain the asset. So as the example one given the other day, right, so the cost of the asset as the one written in the invoice is actually 8,000. Okay, so as you can see here, item 1, item 2, item 3, item 4, and item 5 will be included in the cost. Okay, because all these items besides the price in the invoice are the costs that we need to bear in order to prepare the asset for its intended use. But as you can see here, there's another item that is the fire insurance, okay, even though we need to pay for this, it is not compulsory, so it won't be included in the cost price of the asset. Okay, but still we need to pay for the item. So if you are to prepare a journal entry for the transaction on January 1st, that means we need to prepare for all 6 items. Okay, which is which. Alright, so how do we go about with the journal entry? As I told you earlier, we only have 5 items that will be included in the cost price of the machines. So we will debit machine, and we will credit either cash or bank, depending on how you are paying for the asset. Okay, so as you can see here, we only have 5 items to be included as the cost price of the machine. That is 8,000, 100, 300, 200, and 100. That includes to the total of 8,700. Okay, but at the same time, on the same date, we are paying for the insurance. So since the question asked you to record the transaction on January 1st, that means you need to pay and you need to record the journal as well. So how do we go about with the recording of the insurance? Since insurance is an expense that you need to pay early before you are able to use it, okay, so it is considered as prepaid insurance. Okay, so we will debit prepaid insurance and we will credit cash. Okay, so 8,700 is to declare the cost price of the fixed asset, and 150 is to declare the fire insurance that you need to buy additional to what you already paid for the machine. Okay, all right, so now we go to the depreciation concept. So we have 2 bases to calculate our depreciation. Okay, all right, so we'll focus on monthly basis first. Okay, monthly basis is actually the most for me, okay, for madam, it's the most efficient way to record your depreciation, because it gives you the actual scenario, it gives you the actual perspective of your asset. So why did I say that? Because the purchase that the depreciation is calculated in details, so the asset is calculated and it is fair to the asset, because the depreciation is only based on how long you've been using the asset. Okay, for example, all right, okay, so now we have the monthly basis. Okay, so we have the purchase date and we also have the dispose date. Okay, there are differences, okay, as you can see in the table itself. Okay, when we are purchasing a new asset, so how do we record the depreciation for the asset? If the asset is bought in the early part of the month, okay, so early part of the month, okay, or the first part of the month, that is between 1st until the 15th of that particular month, so the depreciation for that month will also be included in the depreciation expense for the whole year until the closing date. Okay, so let's say if I bought the asset on 3rd of November 2020 and my closing date is on the 31st of December 2020. Okay, since I bought the asset on the 3rd, which is in the beginning of November, so the depreciation for this particular asset will be counted as 2 upon 12, because on the month that we bought the asset will be fully depreciated. Okay, but if you bought the asset, if you purchased the asset, okay, towards the second part of the month, which is from the 16th until the 31st, okay, so to be fair to the asset, because you just bought the asset but towards the end of the month, okay, so for that particular month, the month that you bought the asset, there won't be any depreciation for that particular month. So let's say I bought the asset on the 23rd of November 2020, and my closing date is 31st of December 2020. So if I were to calculate the depreciation for the year 2020, my depreciation is only for 1 month, that is for the month of December. There won't be any depreciation for November because you bought the asset on the 23rd, which goes into this group of date, that is 16 to 31st, okay, the second part of the month. So there won't be any depreciation on the purchase month. So we'll start calculating the depreciation during the next month after the month of the purchase. Okay, all right, that is when you purchase a new asset. Okay, let's say now we are disposing the asset. So assuming that the asset is already with us, okay, we already bought the asset earlier and we intend to dispose the asset, to sell off the asset because of maybe the asset is not performing well anymore, or we need to buy a better machineries or so on. Okay, so we'll dispose the asset. Okay, so if we intend to sell the asset, okay, during the early part of the month, which is on the 1st until the 15th of the month, okay, so since we are not able to use the asset from the very beginning of the month, so on that particular month there won't be any depreciation. So your depreciation for the asset for the current year will be calculated until the month before. So let's say I am selling the asset on the 3rd of November. Okay, so we know that the asset is already with us from 1st of January. Okay, so I am selling the asset on on the 3rd of November 2020. So on so if I were to calculate the depreciation for the year of 2020, the depreciation is only valid for 10 months. That means 10 upon 12. Okay, there won't be any calculations for depreciation for the month of November because I am selling the asset on the 3rd of November, the beginning of the month, the early part of the month. So that particular month won't be included into the depreciation expense. So we need to calculate the depreciation expense for that particular asset until the month before the selling month. Okay, but if I were to sell the asset during the second part of the month, which is on the 16th to the 31st, that means I was already using the asset until in the middle of the month. Okay, so let's say the selling date is on the 17th of November 2020. So my depreciation for that particular year for that particular asset will be 11 months. Okay, so that will be 11 upon 12. Why? Because I will be including November in the selling month, in the depreciation expense as well. Okay, even though we are selling the asset on November, but since the date of the disposal is on the 17th. That means the second part of the month. So that particular month will be fully depreciated for that particular asset. So this is when you are using monthly basis. So as you can see, okay, it is actually the opposite ways of treatment if you are purchasing the asset or if you are disposing the asset. Okay, so let's see if we are using yearly basis. Okay, if we are using yearly basis, okay, that means, okay, the depreciation is recognized in full, okay, in the purchase date, okay, in the purchase year, sorry, okay, but there won't be any depreciation allocated in the year of the disposal. Okay, so what does that mean? Okay, let's say I am purchasing the asset today, right? So today is the 17th. Okay, today is the 17th of November. Okay, so as you can see, it's only around 2 months before the closing date. But how do I depreciate the asset? Since I am using yearly basis, it doesn't matter when you buy, the asset will be fully depreciated for the year. That means that particular asset will be depreciated in full, 12 upon 12, even though I bought the asset somewhere around November. Okay, which is, for me, it's not fair to the asset because I just bought it. Okay, maybe during November I was even able to use the asset, and I only started using the asset on December, but in the depreciation expense calculations, the asset is fully depreciated as if we bought the asset from the beginning of the year. Okay, all right, so if you are selling the asset, that will be a different case, and this is a bonus point to the asset. Why? Because there won't be any depreciation for this selling year. Okay, so let's say I'm using the same date. Okay, I'm selling the asset on 17th of November as well. So do I need to calculate the depreciation for the year 2020? No, we don't need to have any depreciation expense for the year 2020. So your depreciation, so your accumulated depreciation will stop until the year before. Okay, even though I've already used the asset for 11 months in the year 2020, because the year 2020 is considered your disposal year. So during the disposal year, there won't be any depreciation for that particular asset. Okay, all right. So now we look at how we calculate our depreciation. Okay, so as you can see earlier in the learning outcomes, you only have two methods in the matrix level. Okay, so we are only going to use straight line method and also residual balance, or we call it as also as reducing balance. Okay, so how we calculate the depreciation using straight line methods. Okay, what are the particulars that you need to collect from the question? Okay, first of all, okay, you need to see how much is the asset cost. Okay, so here the cost of the asset is 130,000. Okay, and you are given a salvage value. Okay, the salvage value is 10,000 ringgit, and the useful life of the asset is 5 years. So how do I calculate the yearly depreciation? Since we are using the straight line method, that means we only need to calculate once. So the same amount will be recorded as your depreciation expense for that particular asset for 5 years. So you only do the calculations once. That's why we call it straight line method, because the asset is depreciated with the same amount or value throughout the useful life. Okay, so how do I calculate the depreciation expense? So you need to take the asset cost 130,000, okay, and then we'll minus with our salvage value. If you are not given any salvage value, that means the salvage value will be 0, okay, and we will divide with the useful life given, that is 5 years. So the depreciation for this particular asset for that particular year and the year after until the 5th year will be 24,000. Okay, so this is to calculate the depreciation for 1 year, that is 12 upon 12. Okay, and you can also use the information given to find the percentage, okay, to calculate the depreciation. So as you know, the estimated useful life is 5 years, so we'll take 100%, okay, we'll divide by 5, okay, here, okay, and we'll get 20%. Okay, so that 20% you'll multiply with 130,000, that's the cost of the asset, minus your salvage value, okay, and you'll get 24,000 as well. So you can use either or, okay, which is more suitable, or which solution that you find is easier for you to understand or comprehend. Okay, all right, so we do the solutions in the table so that you can see how the depreciation expense actually affect the book value of the asset. Okay, so here we bought our asset, okay, in 2011. Okay, all right, so the amount of the asset is 130,000. Okay, the first year of the asset will be 2011. Okay, as we calculated earlier, the depreciation expense is 24,000. So here the depreciation expense for the first year will be 24,000. Okay, and what about next year and the year after? Actually, it will be the same value. Okay, so for the first year, the accumulated depreciation will also be 24,000. So here you can see that after 1 year of usage, okay, the book value of the asset is 106,000. Okay, the next year, that is on the year of 2012, okay, the same asset will be depreciated with the same value, that is 24,000 as well. All right, so during the second year of the usage of the asset, okay, your accumulated depreciation will be 48,000. All right, okay, so later of the year, okay, towards the end of the year, you'll find that the book value of the asset is 82,000. Okay, so as you can see here, all right, okay, how do you get to 48,000? This is from here, A, all right, plus B. Okay, where is B? Okay, this is B. All right, so this is how you get 48,000. Okay, so 82,000, okay, is when you have 106,000 just now earlier, you minus with 24,000. That is the depreciation expense for that particular year. Okay, all right, so that leaves you with a book value of 82,000 during the second year of the asset. Okay, all right, so we'll have the same amount of depreciation until the year 2015. Why? Because the useful life of the asset is only 5 years. So you need to calculate the depreciation for that particular asset only 5 times, or only 5 years. Okay, what happened after that? Okay, let's say if you are still using the asset, okay, there won't be any depreciation expense to that particular asset anymore. That leaves you the asset with the remaining value, the book value. That is also what we call as the salvage value. Okay, so 2013, okay, the accumulated depreciation, you add up another 24,000, will be 72,000. That leaves you with a book value of 58,000. Okay, so you'll be doing the same thing, okay, for 2014, all right, and 2015 as well. Okay, so the accumulated depreciation for the year 2015 will be 120,000. So towards the end of 2015, okay, the asset is left with only 10,000 book value, which is, this is actually your salvage value. Okay, so after this, all right, there won't be any more depreciation expense for that particular asset, because the useful life is only 5 years. So the depreciation is calculated only for 5 years. Okay, so if we are closing the account for 2016, the depreciation expense for this asset won't be included in the account. All right, but the asset remain in your financial position. Okay, all right, so how do I record the depreciation expense for 1 year? Okay, so as you know, depreciation expense is actually an adjusting entry, so it will be done during the closing date. Okay, so here the closing date is 31st of December 2011. Okay, so you will debit depreciation expense, and you need to put the name of the asset so that you won't be confused which asset you are depreciating, because you have more than one asset in at one time. All right, okay, so the depreciation expense for 1 year is actually 24,000. Okay, all right, so you'll debit depreciation expense for the machine 24,000, and you will credit accumulated depreciation for the machine with the same amount. Okay, this is how you record the depreciation for any of your fixed asset in the business. There won't be any other journal entry. This is the only journal entry to record depreciation expense. Okay, so okay, as you can see here in example 3, okay, let's say the asset is purchased on 20th of January 2011. Okay, and we are using monthly basis. So monthly basis, if the date of the purchase is on the 20th, that means this is from 16 until 31st. So the depreciation expense calculation will only start from the month after, that is February. So when you're closing the account, if you need to calculate the depreciation expense, the depreciation expense for 1 year, as we calculated earlier, is 24,000, but that won't be recorded in your journal entry because you are using monthly basis. So if you are using monthly basis, you need to calculate only based on how many months you are using the asset. So on the month of the purchase, because you bought the asset on the 20 years, so there won't be any calculations on any depreciation depreciation expense, sorry, for the month of January. So the calculation only starts on February. So your depreciation expense is only for 11 months. So we'll multiply with 11 upon 12. So the depreciation expense will be 22,000. So if I were to record the journal entry using monthly basis, okay, so this amount here won't be 24,000, but it will be 22,000 instead, because we are using monthly basis. But if you are using yearly basis, okay, your answer will be 24,000. Okay, all right, this is when you are using the straight line method.